Welcome everyone to the latest meeting of our Integrated Reporting US community. I'm Mary Adams and my co-host is Bob Lux from the IRC. And our guests today are Erica Kelly and Sam Roberts from Intel. Welcome guys. Thank you so much for joining us.
Thank you.
Absolutely, thank you.
Good. And what we're going to do is start off the program just by having a guided tour from Erica and Sam of their 2017 10K. We were excited to look at this because they've taken a lot of concepts of integration and incorporated them at the 10K level.
Let me just kind of start off by kind of giving you some key objectives or some areas of focus that we really embraced this year with our big changes that we made in our 10K. First and foremost, and this is the thing that I think ties most directly into integrated reporting, is we really looked at this from a cohesive storytelling standpoint. You know, we felt really strongly that our 10K shouldn't tell a different story than what our, quarterly earnings materials are telling, or what our proxy's telling, or what our CSR report is telling. It's still one Intel story, just has some different lens and primary focuses that you're looking through. So, obviously the 10K is more the financial focus, but we still wanted to make sure it was the same story. So we worked really closely across a wide variety of groups at Intel, investor relations, CFO office, public relations, worked closely with our strategy office, our legal areas and our CSR team to make sure that even though we don't have one integrated report, each of our reports and kind of avenues for telling our story is still tied into that same central Intel story.
Great.
Yeah, and as we go through, we'll touch on a number of areas where we really looked at improved organization, kind of pulling the most relevant things up, giving it more prominence, and then also how to tie things together. So we went away from the traditional 10K format and flow, where you start with item 1, go on to item 2, and then you eventually get to the financial statements, that type of thing. And said, no, what makes sense? How would we tell our story if we had a blank page of paper and we're starting from scratch? And then we really looked at how do you bring things together, because felt that the traditional Form 10K kind of ends up having very choppy sets of information. It's all very good information, but it's hard to pull it together and see how things fit. So we, based on some conversations and some feedback we heard from the SEC directly, we really took the liberty to say, okay, scratch the standard form. We're going to repackage this in the way that makes sense to us and our story. And then, in the back, because it is still an important compliance document, we have kind of a cheat sheet to get you back to and see the linkages between the traditional Form 10K sections and the rest of it.
Yeah, so that was a great introduction. Thank you so much. Sam, you have any comments as we get started, or?
Well, I just want to follow up on, talking about the objectives, and I know we want to get into the viewing the document. But,
no, this is great. Thanks.
I think, socializing throughout the company that this document's more than a compliance document was pretty important. And, not everybody's there yet, but it's a journey, and we're making multiple multi-year steps. This year just happened to be a very large year in that progression. We're still not done. We're continuing to evolve our document in the same way that we're transitioning our company. We're transitioning the way we report and talk about our business. So it's important that we're out there reflecting. Erica mentions, telling our story. Well, it's hard to pick up the transition that's happening within our business in the previous or the more traditional format. We had to make what was going on within our business more alive, and we do that through clear images, graphs, charts, and just putting that data in a different context outside of narrative. It changes the messaging. It makes it more alive and engaging, and that's really what's going on at Intel. That's what we're trying to convey.
Cool. Well, that's a great introduction. So if if I may, I'll jump over and let you kind of give us a tour.
The overarching concept is we didn't want to create a separate work stream for our 10K, our annual report. And if to the extent that we did some type of wrap, which we did a slight wrap here with these 2 letters, we wanted to make it as minimal as possible. We wanted to pull as much into the document because if it's important enough for the annual report, it's important enough for the filing itself. I would say that we've always had, these letters, but yeah, so this is not much of a change. I think where you see the real change is once you get into after the cover page on the Form 10K.
Yep. So we'll go down and get to that. We have the expected cover page, as Sam said. And then I think right here at the beginning of the table of contents, we begin to see some of what you're trying to do.
And so this is a really good page that demonstrates the reorganization we made to the annual report. We actually spent a ton of time on this, trying to figure out, how do we put the flow of information together. And this is eventually where we landed. So you really have kind of the overarching pieces of information, the fundamentals of our business. Right there up in front, the business introduction, year in review, and how we organize our business. And the purpose of those sections are to, if someone reads 3 pages from our annual report, reading those 3 pages, they will actually have a pretty good understanding of who we are and what happened for the year. And then we obviously get into kind of deeper dive into that information. But it's the most relevant and most important, meaningful things to our business and the way we manage it. So strategies right there up in front. For Intel, R&D and our manufacturing. Those are the types of things that we pulled up. And, in terms of the integrated reporting, very much wanted to also highlight the human capital and the CSR, the corporate responsibility and sustainability. We'd always had a page on that in our 10Ks, well, always since I've been in the role at least. Human capital we added this year because that was kind of getting more prominence in the CSR report.
With other what we call core assets
Yeah.
that we had. Obviously our people are important, and the environment and protecting the environment was important to us. And some of the things that we've done in that area, we believe brought core tenants or assets into realm. But what we did is we moved some of the business strategy out and focused, more content just solely on those 2 topics to give it more prominence.
Mm-hmm.
Got it.
And then we got into more of the traditional MD&A discussion. And we went back and forth on this one. We did decide to keep, management discussion and analysis, MD&A, because it's such a common and well-known piece of a report. And there you really get into, overview of what happened for the year. Deep dive into some of the consolidated results, and then a really nice deep dive into each of our reportable segments. This was a really exciting piece to engage with the business on and give the GMs and the CFOs of these areas a direct voice and a direct link. And it's so much better mirrors the way they actually go and talk about their business versus rewriting the way they talk about the business in, prose type format.
I remember hearing a business saying how cumbersome it was to take what they had presented in PowerPoints and slides and to the investor community and trying to translate that down into a narrative. And they felt very freeing for them to just take that same set of materials and translate it into our documents. So, we just finished up a leadership summit internally, and it was great to see a lot of the images and materials that were in our 10K and our filing showing back up in presentations that are being presented internally to reinforce messaging.
Cool.
Back to kind of that one Intel voice, that cohesive story. And then, very much got into all the other required, very important, but not quite as exciting areas of a set of financials. So, stock performance graph, risk factors, very much has its place up here in kind of the other key information. and then traditional financial statements.
Great. So I'm just going to page down, and there were a few things we thought we'd highlight. So if you want to just stop me as we kind of get to some of the pieces. It's a little choppy, but there's some really fun things that they've done here. So
the year in the review is probably the first stuff.
Yep. So this page is, like I said, it's kind of thought of as the executive summary. And if you look at it in the book, it's 2 pages and a spread. So you have your year in review first page. It's really focused on the financial metrics. And then you have your second page, which is kind of the key milestones, the not financial, but really important pieces of our business. So new product launches, acquisitions, divestitures. And throughout these 2 pages, worked really closely with investor relations, especially to ensure that the same information that we're talking about when we go in our quarterly earnings releases, how we measure ourselves, the forecasts that we're giving, and kind of the medium term forecasts that we're giving, especially like at Investor Day. How do we take that story and bring it in here? And you'll see if you actually go up to the first page, that center column is accountability to the goals that we've expressed publicly. So, what have we said in terms of revenue growth? How did we do against that? Operating income, and then how did we go and do against that? So did we achieve it? Did we meet it? Or did we, not achieve it? And as we were going through this and developing it, we all had a pretty clear picture it was going to be a good year, but we really wanted to drive that conversation and make people comfortable for years that might not be as good, whether it's an economic downturn or whatever. So challenge people to say, hey, if you're willing to say it in a good year, are you also willing to say it in a bad year? And I think one of the biggest outcomes, which I was excited about, is people said yes, and not only just yes, but it's those bad years where you almost need to be able to talk about it, because it gives you your chance to explain what went wrong and what you're doing to overcome that.
Great.
And so I totally agree. We had a lot of robust discussion around not achieving and how that would play out in the presentation of the document, because we're not going to always paint a rosy picture to the extent it doesn't exist. But it was also around just driving more accountability within the organization. So people understanding that, people are going to see this and know it, but also that this document isn't the first source of information. So if it wasn't achieved, they shouldn't learn about it for the first time in this cover page, theoretically.
Good point.
Release or other communication. So that was a big piece of the conversation. I think the other thing that's interesting on this page is this is the first time that we've introduced non-GAAP into one of our filings like this, and there is more restrictions, requirements around that, which obviously we manage very tightly, but we do speak to non-GAAP, provide very clear reconciliations, descriptions on why we use it. And I think it's helped drive the discussion away from, oh, this is just a compliance document. Okay, this is a document. Okay, now it tells our story, because now it has some metrics in it management is connecting to.
We actually got to the point where we almost felt like we had to include non-GAAP here, because talking about our goals and that accountability, it's measured on a non-GAAP basis. So how could we not have non-GAAP in here and talk about how we did against that?
Great, thank you. I think I'll keep paging down to the next sections. This
Stop it here. It's continuation of the first page.
Yeah, again, this is really a one-page snapshot of all of our different business units. Shows what percent of Intel's total revenue it's giving, and it's that type of information that really pops off a page and makes you easily digest the information and see CCG, DCG, top two are obviously the lion's share of the Intel business still, but the other ones much smaller, but that's where those growth opportunities are. Quick, touch on each of the areas, products and markets. And then the really great piece of this page is having each business unit share their highlights, their challenges, and their opportunities. And this is what really ties into, the real meat of the information and really meets the principles of what an MD&A is supposed to put out there. It's not just giving the plain vanilla information, things that have happened. It's also giving people some insights into what's the future look like. What are the key things that the company needs to do? What are some of the risks to that so they can go and make informed decisions?
You were covered by the safe harbor and the forward-looking statements.
Yeah. This is really, we had some business units come in and really have almost more like an advertising marketing type document. And so from a SEC reporting standpoint, we had to make sure that this was a balanced presentation of information. But again, it's, there's a ton of really great information right here on this one page.
That's great. So let's move down to the capital allocation section.
Yeah. So I think this capital allocation page is a really great example of how we had information spread throughout our annual report and our 10K previously. So there's no new information on this page, but the way it's all packaged together, it shows how a bunch of discrete data points actually play together and paint a picture. So it's much richer information because we start with really talking about what is our capital allocation strategy and priorities, and then show those pieces all together. So first we invest in the business, then we acquire and integrate, and then we return cash to shareholders. And this is stuff that has been in Investor Day materials before. It's been in the chairman letters inside the annual report. But again, it just didn't all come together. So we spent quite a bit of time on this page to make sure it had that cohesive story. The information means more altogether than it does in the discrete.
Great, and it kind of lends itself to kind of the capital's thinking about the long-term thinking about what you're building. So.
Yep, exactly.
Great. So then the strategy section. Here are some of those graphics you mentioned, Sam. You're describing, giving an overview here.
Yeah, this diagram or picture that's here, the technology industry, almost every company has some version of this, but what we're trying to do is we're trying to bring it to life and talk about how specifically it relates to Intel and how our products are helping to fuel that virtual cycle and drive connectivity and the movement of data. And kind of moving down onto the next page, talking about this strategy. There's our strategic enablers, which those three, if you want to kind of scroll back up a little bit.
Oops, got it.
Where we talk about the fact that we have an architecture, intellectual property, presence that we leverage off of with a major manufacturing base, and our reliance on Moore's Law in continuing to drive innovation is key to all of the products. Those being not just CPUs, but memory, modems, all aspects of the business based on where we've made recent investments. We've made some big bets, and now we're in that mode of capitalizing on those big bets and executing. And there's an extreme focus on bringing spending back into line now that we've made our bets and transitioning the company from being purely focused on PC to being a very data-oriented, data-centric, as we say.
Cool.
One of the things we, one of the takeaways from these 2 pages is really the concepts and the threads that start here, we make sure are woven throughout the report, and not just the 10K, but also our CSR report and also our proxy. So I think, you know, that virtuous cycle and the key elements off of that, you'll actually see that in those 3 documents. So, you know, that's how we're bringing integrated reporting.
Cool. So these then go into more detail on those concepts, right?
Yeah, and this infographic right here, you know, this is nothing new. It was there in Words before, but we worked closely with the business, because this is where, you know, the saying of a picture says 1,000 words is so relevant. Like, you can look at this, an accountant, you know, a non-technical person can look at this and be like, oh, I get what Moore's Law is. Much better than having to read through the words previously. So we're looking for opportunities to introduce more of these type of things. And these are also the really great takeaways that people can leverage outside of the report.
And I'll remind people that this is at 10K, and we're not used to seeing that kind of thing in a 10K.
That's right.
Yeah.
Yeah, our CFO got really excited, you know, with the final project. He was just like, oh, finally, I'm not like being drugged through reading all this stuff. So,
right.
Good point. I think we got to talk about the CFO engagement and the audit committee engagement.
Yeah.
You know, a lot of the things that we were doing within this document wouldn't be possible unless we had that commitment at the highest levels, the audit committee and the disclosure committee and the CFO, the chief accounting officer. You know, coupled with that was the transformation. So there was a catalyst in the environment to make that change. I've been part of great companies that could do this very easily, but the catalyst and the commitment at the top just wasn't there because the focus was in a different place. So you almost have to find your perfect storm in order to you know, transition to a document like this. And you know, I think that's the key for professionals like us that are interested in this thing, is, you know, trying to figure out, you know, how to capitalize on that storm or crisis, I guess.
So let's look at a couple more things and then we can turn off the camera. But, you know, as you mentioned, human capital, this is, you know, it was a new section for you in the report, and certainly a great step towards integrating your report.
Yeah. This is actually where, you know, there was something in our CSR report historically that we pulled in to the 10K. You know, we had to do some changes in process in terms of getting the information, timeliness of it. But there was nothing here. Yeah, that was a light lift. It was something that would have to be done anyways to satisfy the CSR report. So let's bring it together, because it was a more fulsome and rich dialogue about our human capital, which is you know, so important to Intel.
Right. And then again, you pulled in the CSR information directly in. I thought your point was great about the fact that it's all aligned, that it's the same message as in the deeper CSR reporting.
Yep.
I think, you know, going from here, just on a couple of other topics, I think we need to, I think that if you go to critical accounting estimates, you know, for people that are heavily involved in these compliance documents, you know, usually you're talking about critical accounting estimates within MD&A, and a lot of times there's a repeat of what's in the significant accounting policies within your note 2 or 3 place it. And we streamlined the critical accounting estimates down significantly and leveraged off of what we had in our financial statements, not repeating information twice within the document, but adding that, you know, some of the, you know, critical accounting estimates have some additional disclosure requirements, you know, around sensitivities of, you know, the estimates and whatnot, working with our auditors to on what those sensitivities are that they would be willing to opine on or not. So
flow standpoint, it just made so much sense to talk about critical accounting estimates with the accounting policies, as opposed to kind of repeating or having pieces of information in different sections.
That's great. So we're not going to show those just because we have to page down a long way into the report. But if I may, I'll just show this is the start of those business by business discussions that you talked about.
Yeah. So like I said, each business unit really had kind of a 3-page spread. The first page was focused on, the core overview of the business, what their primary products are, what, some 5-year trends to kind of give you a really quick snapshot of, is that business growing? Is it shrinking? What are some of the highlights for the year and key things that are really important to their success? Into a deeper dive of, that's okay, the market, their products, the competitiveness of those products. Is it CCG that has the lion's share of the business already, and is it a declining market, or is it DCG where the data center market segments are growing and we have great opportunity for additional growth. And then the third page gives a lot of what would be the traditional results of ops. So giving that segment revenue walk, which ties into our key performance indicators like volume, ASPs, adjacent areas of the business. Are things growing? Are they shrinking? The walk just lets people absorb that information so easily and so quickly. And then, giving some of the qualitative drivers. What's driving things up? What's driving things down?
Moving it from a paragraph type format into a bullet point format.
Yep.
You can see the plus and minuses on the page, so they can say, is that a positive, negative impact?
Almost needed like a cheat sheet to get through some of our previous paragraphs. What does the semicolon mean? Well, here, the plus and the minus sign. It's very intuitive.
Right. Cool. Well, this has been a great introduction, and so I'm going to turn off the camera and thank anybody that's watching the video and invite them to come back and participate in a future program. And for now, we're going to step off, but thanks again to Erica Kelly and Sam Roberts.